What does break even mean on Robinhood? So you are interested in trading in stocks? Well, in these tough times, good investments can really be your password to success. But before you decide on trading in stocks, you must understand the working and functioning of stock values absolutely to the core. With insight and foresight, you can actually make a fortune out of stock market investments. It is not easy to be able to successfully trade in stocks over a very long period of time. However, it is not any rocket science either. If it was, then stock trading companies would not have been able to stay in business for so long. What you have to have is knowledge. The understanding you show in the working of stocks is of paramount importance. Investing in the right stocks can literally earn you a fortune over a really reasonable period of time. But when you take the wrong decision and invest in the wrong companies, it is not that difficult to lose a fortune in the stock market either. There are a lot of resources available on the internet today, which makes life much easier than before when you focus on stock trading. So what do you need to understand about stock values? The first thing that you would need is an understanding of analytics and a fairly analytical incline of the mind. Every joint stock company works with interaction with the market forces, and they are affected by the interaction of market forces as well. When a company takes any decision, it has a reaction with other companies, which leads to the interaction of market forces. Also, you need to understand trends as well as the variability in trends. Stock trading is basically a mathematical game where you have to maximize revenue subject to market constraints. You must understand that if a company is showing an upward trend over some time, it is likely to take a dip at some point. Again, the vice versa is also true if a company has potential and is doing business competitively. The trick is to understand when to hold the share of a company and when to trade it based on what the expectations are from the future. In general, shares in stocks are capped in 3 categories from low to middle to high. When you buy a company's stocks, you would benefit from holding the stock over longer periods of time. That is, if the company doesn't shut down. The conjecture behind this theory is simple. A company is expected to turn in higher profits with expansion the longer it stays in business. What you are essentially putting your money on is the expectation that a company has come to business to make profits and will eventually do so or shut down.